Hello, and welcome to Ways to Leverage Your Credit to Build a Real Estate Portfolio. My name is Danikia Smith. I am a licensed realtor serving the greater New Orleans area. I am so excited to be here with you today to share with you some strategies that have helped not only myself, but my clients alike. Now, if you're saying, well, I don't have to just use credit to build a real estate portfolio, you are absolutely correct. But today I want to focus on utilizing other people's money. You may have heard this called OPM, but essentially it is credit. And so I want to hop in today and share with you some tools and some resources, as well as some strategies that can assist you with building your real estate portfolio. I want to welcome you to the First Home Pathway series. This topic today will focus on ways to leverage your credit to build a real estate portfolio. We're going to explore some of the fundamentals of credit management. We're not going to do a deep dive into credit, although I have tons of videos on this YouTube channel that you can actually go and check out. We want to make sure that today, when you walk away from this information, that you are equipped, whether you're an individual or a small business owner, with actionable tips that you can utilize to optimize not only your credit profiles, but your real estate portfolio. Who am I? I said, let me share a little bit about myself. I haven't done this on previous recordings, but I wanted you to know that it's actually a real person behind this voice. I want you to know that I am a wife. I am a mom of actually 4 boys. You only see 3 there. We got to get some updated pictures, but we have 4 boys. I am also a realtor. I love serving and helping families, whether they're buying, selling, or investing. I am a entrepreneur. I guess I should say serial entrepreneur, as well as a philanthropist. You'll see a picture there. Those are some seniors that I was had the opportunity to bless with scholarships that were graduating from high school back in 2018. This was able to take place because of the Boys and Girls Club. I'm actually an alumni of the Boys and Girls Club. I am a BGC kid. And I always said, once I make it in life, I would give back to the organizations that poured so much into me as a youth. And I was able to do that, and I was so excited. I always share this. If you don't know me personally, this organization really, really changed my life as a youth. But let's hop into the details and the information, right? Enough about me. We need to shine light or illuminate the fact that formal education just doesn't teach us about the things that we need to know as an adult to be able to navigate successfully in the financial industry, whether that's purchasing a home, getting a vehicle, or just simply understanding credit and credit scores in general. Those things are just not taught. And so I want to make sure that I do my best to educate not only just adults, but I also spend a lot of times even with our youth to make sure that they understand these fundamentals before entering the real world. Formal education doesn't talk to us about investing in real estate or even real estate financing, which is so huge. And of course, they're not talking about building a strong real estate portfolio when we know that real estate is the one of the number one vehicles to help individuals establish and build wealth globally. We want to take a little time to understand credit scores and the impact that it has on so many areas of our life. Your credit score is like a vital sign. It is being monitored at all times. You could literally get an alert right now in the middle of the night or bright and early in the morning, letting you know some changes may have happened with your credit score. These scores can impact all types of things, especially insurance premiums. And this is not just insurance premiums for your vehicles. This includes premiums or insurance premiums that cover your home. This includes insurance premiums that cover your life, Yes, life insurance premiums are also based upon your credit score. I actually should mention as well, I'm a licensed um, life insurance agent as well, licensed in the state of Georgia and Louisiana. We know that credit can impact interest rates, right? The lower your score, the higher your interest, and vice versa. You can be denied the ability to rent, to purchase, get a credit card, and if you're not aware, even employment. Yes, employers do, not all, but a lot of them do pull your credit to determine if you're a good fit for a position at their organization. Over the course of your lifetime, it has already been said that less than excellent credit will cost you over $200,000 or more. This number is not factored in with the inflation that we are experiencing. We know that everything is higher right now. And so you need to know when it comes to required deposits, fees, interest, you will pay more if you neglect your credit score. Understanding that mortgage lenders, when they're determining your eligibility, they are looking at your credit worthiness. Applying for a mortgage, your credit score is the primary factor, right? Before they even look at your income. Because some people say, well, I make all this money. That's great. But what does your credit say about you when it comes to your credit worthiness? You need to understand how your credit score is actually calculated. So I want to briefly just share some of the factors that play a part in making up your score. First of all, 35% of your score is, do you pay your bills on time? Payment history. Are you missing payments? This is the largest chunk. So when people ask me, well, what matters the most? Paying your bills on time. One late payment can cost you anywhere from 30 to 70 points per late payment. So if you don't do anything else, don't pay your bills late. The second biggest piece is the amount that you owe. That is 30% of your score. This will be referred to as DTI when you're going to get a mortgage. DTI stands for debt to income ratio. How much debt do you have in comparison to your income? The higher your debt, sometimes it's the less likely you're going to be approved for a mortgage. You may have to pay down some things in order to get qualified. If you have credit cards, they should not be maxed out. You should not be utilizing more than 30% of your credit, available credit at one time. Another 15% is length of credit history. How long have you been building credit? So many people are afraid of opening credit cards because of maybe stories they've heard from family or friends, and they just stay away from credit. You want to know if that is you, you should not be taking that route because lenders are looking at how long have you been building your credit. Another 10% of your credit is types of credit. This is also referred to as credit mix. Lenders want to see that you're able to handle multiple types of credit. A lot of times I find individuals have one type of credit and not the other. What are the types of credit? You have installment accounts as well as revolving accounts. Installment accounts are things like your car loans or your mortgage loans, right? And revolving is your credit lines, your credit cards. Another 10% is new credit. How often are you applying for new credit? How many inquiries do you have on your profile? You want to know that inquiries account for 3 to 7 points each. You should not be out here applying for multiple things at one time. I will always say consult your finances, look at your credit profile and see what the actual need is. And push comes to shove, speak with someone that is very knowledgeable in the credit space. You can't see me raising my hand, but I am raising my hand because I am also a board certified credit consultant. Okay. A higher credit score demonstrates your responsible financial behavior and it will improve. I know I said may, but it will. improve your chances of being approved for a mortgage. On the other hand, having a less than perfect credit score will and can raise red flags for lenders and potentially limit your eligibility for certain loan programs. I always tell my clients, my goal is not to just help you get qualified. I want to help you get qualified with the best rates and programs that are available for you. Credit is a crucial factor in securing real estate financing, so we cannot neglect this very important area. Let's talk about real estate financing. Now, there are many types of financing options out here today. I just want to focus on just a few of them, right? These are some great options for real estate investors. You have conventional loans. I have this at number one because this is like an A1 type of loan program that requires A1 credit. This is a loan product that is not insured or guaranteed by the government. You are going to need stronger finances to qualify. Conventional loans usually have larger down payment requirements. And of course, you're going to need higher credit scores compared to the government backed mortgages like FHA. FHA is geared towards borrowers with lower credit scores, as well as I would even include lower income, right? These are individuals who don't have a ton of money to put down, but they still desire home ownership. So the government has made it possible for everyone to be able to achieve that goal if that is your goal. There are different FHA loans that will not only allow for you to buy, but you can even build or renovate a home with this type of loan product. You can only get a new FHA loan for your primary residence, which means you cannot utilize this type of loan for investment properties or for a second home. You will need to fall into category number 3, FHA 203K. This is another type of government insured mortgage, but it allows you as a borrower to take out a loan for two purposes: to buy the house as well as to renovate the house. This is a perfect option, as I'm noticing a lot of buyers today not only want to buy a home, but they want to buy a home that's move-in ready, doesn't have a lot of issues. But if you're willing to say, hey, I'll take a home with a few issues, or I'm an investor, I don't plan to live in this home anyways, I'll take this lending option, get the funds to buy the home, and then utilize the remaining funds that I was approved for now to fix up this home and resell it if that is your goal. VA loans. If I have any veterans out there or any active duty military, there are specific loan programs or a product set up specifically for you. This loan is offered by the Department of Veteran Affairs, and it allows and helps service members, veterans, and their families to buy homes. This benefits you in so many ways. Most importantly, it benefits you because you won't have to make any down payment and you won't have any mortgage insurance requirements. I run into a lot of active military or veterans who will say, well, I didn't utilize my VA loan early on because I am stationed or restationed or may have to move every so often. So I don't want to get tied up into a home. While I understand that logic, I would even give you a different perspective of what if you qualify for a VA loan to purchase here today. Homes appreciate, by the way. If you buy a good home in a good area, it will appreciate. You may get restationed or get new orders in a year or 2 years. That now means you can list this home to be sold and possibly walk away with a profit. So it's like getting a bonus or additional cash to relocate and then repeat the cycle over and over again. Or you could decide to rent the home out in whichever area that is. And I'm going to go through a few options with you in a moment of ways that you can manage a property even if you're not physically in the same location. How credit scores impact your loan to value ratios and the overall terms of your mortgage. You need to know that a higher credit score, you're going to receive the better terms for your mortgage. Or if you're deciding to refinance, you're going to get the better terms. Lenders can set their own levels, but typically a buyer with a credit score of 740 or higher will receive the best interest rates on a mortgage. Can you purchase with less than a 740? You absolutely can. Just know it may cost you more, or you may be limited to what programs you will qualify for. I want to share this house hacking example with you. This is an easy way to get into real estate investing, especially if you are already a renter. Why do I say especially if you're already a renter? Because typically renters are already used to moving a few times over a course of a few years time frame, right? So with this hack, understand this isn't to be a permanent situation for you. This is only to be temporary as you're building your real estate portfolio. This is going to be multi-family living, which is very huge in the state of Louisiana and several parts of the US. This allows for you to qualify for an FHA loan or a conventional loan and purchase a multifamily that comes with more than one unit. And if you have a family, I know right now a lot of individuals are living with their parents or allowing their parents to stay with them. This allows for you to still stay together without having to stay together, right? Everyone can have their own separate unit and come together collectively to pay off this mortgage, then turn around and do this over and over again. So, what is it? How do you do it? Okay, you got to have the credit, of course. You must qualify, of course, for financing. When you do, now you're able to go purchase a duplex, a triplex, or a quad. This is 2 to 4 individual units at one time. And let me reframe that. Not individual units. This is one unit that comes with multiple doors. Each unit, for example, if you're getting a triplex, you live in one of the units, rent out the other ones that are not occupied. You could essentially have other people paying your mortgage for you while you're staying rent or mortgage free. It could possibly even be enough to cover the mortgage and your utilities. Now you're living absolutely free. And if you're working a traditional 9 to 5 job, this will allow for you now to begin to save your paycheck to be able to do this all over again. After paying your mortgage, you could also be left in the positive, right? Depending upon how much you're charging in rent. Another tip is when buying a multifamily, lenders will count the rent that you will get from those other units as a part of your income, which will essentially increase the amount that you qualify for. If this was a lot, maybe you couldn't understand it or you want me to break it down a little bit more, be sure to click on the link in the bio or the description box, and schedule a free consultation so that I can make sure you fully grasp this house hacking tip. Real estate plays a crucial role in the global economy. This offers opportunities for investment, wealth creation, and economic growth. There's 4 types of real estate investments that you can consider when it's time to buy. You can decide if you want to buy land, which is considered real estate, a residential home, a commercial home, or an industrial property. What is land? Land can be raw land. It could be subdivided land, meaning you bought a piece of land that is 5 acres and you've subdivided the 5 acres into 5 1-acre lots. So now you could potentially purchase, let's say, 5 acres for $100,000, and then turn around and subdivide that land. You have to get approved, okay, to do so in your local area to subdivide. But once you have the approval, you subdivide and sell now these lots, let's say for $50,000. 50 times 5 lots, that's 250,000. So now you more than double your money on the investment. Residential, you have your single family homes, you have the multi-families that I just shared with you, condominiums, townhomes, co-ops. When it comes to commercial, this includes retail space, office buildings, hotels and hospitality, mixed use properties. These are the properties that may have a store at the bottom, and at the top you have living area. Industrial includes warehouses, manufacturing facilities, distribution centers, data centers. Building a strong real estate portfolio. You're going to need a team. You're going to need assistants. You're going to need licensed professionals. I stress the word licensed professionals that know what they're doing to assist you on this journey if you're desiring to build a strong real estate portfolio. There is a lot of information all over the internet. And so I implore you to do your research before you invest in anything, and absolutely make sure that you're working with a licensed professional. In the example that I gave you earlier with the VA loans, having to move maybe across country or out of the country, you may want to rent out the property that you purchased, but you're not there locally. This is where I would encourage you to get a property management company to manage your property for you. They typically charge about 10% of the rent that you charge per month to manage the property. But now you don't have to worry about if your rent is being paid on time. They're going to make sure to collect your rent. If there's any issues with the properties, you don't have to worry about getting those phone calls in the middle of the night, say my pipe burst or there's a leak. You'll have a whole management team that takes care of that for you. Finding potential investment opportunities. This is where you want to rely heavily on licensed professionals and even title companies or attorneys. I have saw so many stories here lately where individuals have been taken advantage of, money given to people to invest in properties for investment opportunities, only to find out that there were no real properties or no properties at all, and their money was gone. And this is why, again, I am stressing making sure that you work with licensed individuals as well as individuals that you can actually research and see their track record. And you want to also get a good understanding on how to maintain as well as how to grow your portfolio over time. All strategies are not the right strategies depending on where you are at that specific time frame. So you just want to make sure that you are doing your due diligence. If you have additional questions, I have put my contact information here on the screen. If you would like to book a consultation, be sure to click on the link that is in the description box so that we can go ahead and hop on the line to discuss your buying, selling, or investment needs. And if you have general questions, make sure that you also join my email list as I drop tons and tons of value on a weekly basis. I want to thank you for tuning in, and I will see you all next time. Thanks for tuning in. Take care.